Yes, people, a very happy morning to all of you. So, guys, we started with a brand new topic in the last class, which was buyback of securities. So, before we head forward, let's do a quick recap of what we studied so far. Quickly tell me, people, what is the meaning of buyback? Okay, repayment of money amount before the due date. That is, unplanned payment is called as buyback. I'm not using the word buyback of capital because security has both shares as well as debentures. So if I'm buying backing the shares, it is called as buyback of capital. I'm able to follow repayment of capital. But if I'm buybacking debentures, that is called as repayment of borrowing. So buyback primarily means what? Repayment of money, repayment of amount. Now, securities has got a very broad meaning. If you look at the definition of security, it's got a very broad meaning. But for the discussion point of view, or from the discussion point of view, what we had in the last class, what did we assume as securities here? Equity shares, preference shares, and debentures. So here, when I'm talking about buyback of securities, from this chapter, you'll get question based on which fixed securities, buyback of equity shares. So we ask you what is the buyback of equity share means? It is repayment of capital before the wind up. Because normally, when do we repay the capital to the equity shareholders? Only during wind up. But before wind up, if I pay the money to the equity shareholders, that is called as buyback of shares, buyback of equity shares, buyback of securities. Any problem in this? So in the process of buyback, the company repays the money back to the shareholder, and in return, the shareholders have to submit their share certificate. So typically, private companies and the unlisted public companies will have the shares in the physical format, whereas all the shareholders of the listed company will have the shares in the digital format. So when we said that the physical share certificate needs to be torn apart, it is about those private companies or those unlisted public company who issue the shares in form of physical share certificates. So when you get that share certificate back, within 7 days of completing the buyback procedure, you have to physically tag the share certificate. Any problem in this? No problem. Now, what is the difference between buyback and redemption? What is the difference between buyback and redemption? Ah, correct. Sir, buyback is repayment before the due date, whereas redemption is the repayment on the due date. So redemption is possible in case of only preference share and debentures. But for buyback, you have equity shares can be bought back, preference share can be bought back, and debentures also can be bought back. Wonderful. When you do the buyback of the shares, when the shares are bought back, what impact does it have on the share capital of the company? Sir, it reduces the share capital of the company. Wonderful. What are the objective of buying back the shares? What is the objective of buyback of the shares? First is to increase the promoters holding. So we saw example where the promoter holding from 20% got increased to 25%. By this virtue, what happens? The promoter will have more controlling shares under his control. Thereby, he can influence the company for decision making. If we don't do this buyback, if the promoters do not raise their holding, there's a possibility of hostile takeover, where the competitors or other people will start taking over the company gradually. And once they have the majority of the share, means 51% and above, then they will start dominating the management of the company. To avoid the hostile takeovers, it is important that the buyback needs to be allowed. Second, buyback results also into increasing earning per share. Earning per share also is increased. We saw example that earning per share was 40, then it got increased to Jayesh, how much? 50 rupees per share. So what is the profit, divisible profit that we took as example? 40 lakh. 40 lakh was the divisible profit divided by 1 lakh shares before buyback. So what is the EPS per share? Earning per share is how much? 40. And later we bought back 20,000 shares. So how much is the remaining shares now? 80,000. So same divisible profit 40 lakh, if you divide by 80,000 now, what is the earning per share? 50 rupees. This example also we saw in the last class. Then we understood that some companies have surplus money left in the business. So they don't know what to do with that money. So they might go ahead and do the buyback. So if you have surplus cash, you can do the buyback. And whatever buyback you do, it leads to positive impact on the stock market. People become more happy because when you are buying back the shares, you will offer the price more than the market value of the shares. Whatever is the value of the share, more than that you offer. So they become very happy. So stock market is responding very positively to your proposal of buyback. Am I clear? Second, what happens when you're proposing the shares to be bought back at the higher price? More people consider buying the shares of your company. Thereby, in the stock market, what happens? there's a huge demand for that particular share. Automatically for a product, when there's too much of demand, naturally the price of that share will increase. So other shareholder who don't want to surrender the share, they can enjoy the increase in the market value of the share because of the buyback proposal. Any problem in this? So far understood? Online people, so far understood? And when the
Yes,
promoters do the buyback, when the holding increases, that gives a what you call a sense of confidence among the investor that the promoters are holding the share. Means what? The future of the company is going to be very bright. The company is going on the right track, and by that virtue, what are we supposed to do? Invest more in that company. So automatically, again, share market will go up. So buyback has got a very good positive impact on the stock market. And second, it improves the capital-based accounting ratios. Any problem in this? Online people, any problem in this?
No, sir.
Okay. Buyback, no doubt or undoubtedly, is a event that favors the business management promoters, to be precise. While this process is favoring the promoters or the company, the person who's holding the shares, this process also is unfavorable to somebody. Who's that? External liability holders. When the buyback process is initiated, the most unhappiest person on the earth is going to be external liability holders. Can you please tell me why is he unhappy? Correct. If you look at the order, in it's the payment has to be done as per Companies Act. Always, whenever the company is winding up, company law says that external liability holders, your payment will be repaid first. After making the payment to you, if there is any money left over, then we will settle next the preference shareholder. After that, also, if any money left over in the business, we will lastly pay to the equity shareholder. This was the order that was promised by the Companies Act. Now, the company is going to break the promise, not the act. Company is going to break the promise because now they're going to make the payment to equity shareholder, the third party, even before the first two party. So the external liability holders will start feeling threat. He'll start feeling very insecure that why is the owner withdrawing the money all of a sudden? Is there some threat or risk that is coming up in the future? So should we also withdraw from the business gradually? Should I stop giving loan to the business? Should I stop supplying the goods on credit? Like that, the negative thoughts might start coming in the minds of the external liability holders. Therefore, to protect the interest of the external liability holders, to give them a comfortability, Companies Act had come out with a solution in section number 68, 69, 70. Because if I don't put 68, 69, 70, and if buyback is not allowed, the company will be at risk by hostile takeover. If I allow buyback, the external liability holders are getting affected. So now we have to come out with the in-between part where the external liability holders also don't feel any risk, threat, or less of a security. And at the same time, buyback happens to prevent the hostile takeover. So for that, the Companies Act has to come with a in-between path. And that is what is section 68, 69, 70. Correct? So if 68, 69, 70 is not being complied with, what happened? We saw the security of the external liability holders before buyback was 3 in our example. After buyback, that is without complying with section 68. What does 68 says? Section 68 talks about keeping the capital intact. Without keeping the capital intact, if you do buyback, the security of the external liability holders from 3, it got reduced to how much? 2 point? We saw here, no?
2.6.
2.6, it got reduced to 2.6. Yes. After buyback, it will get reduced. So this should not happen. This should not happen. The security of the external liability holders before and buyback should always be same. And hence, 68 was proposed saying that if you want the security of the external liability holders before and after buyback to be the same, in that case, the capital before and buyback should be same. So what have they proposed? They proposed with 2 options. One, to keep the capital intact, you can issue preference share because I'm going to redeem what? I'm going to repay, not redeem. I'm going to buy back what? I'm going to buy back the equity share capital. Further, I cannot issue an equity share, but I can issue a preference share. So you can issue the preference share. So if one capital is removed, it is being substituted with another capital. If equity share capital is removed, I'm substituting with the preference share capital. By that virtue, the capital before the buyback and after the buyback shall be equal. Second option, this is an option when you do not have surplus money. When you don't have surplus money, you tend to increase the capital by further issue of preference share. Now we are talking about those companies which are super cash rich. We have highest amount of money. In that case, what happens? They will not issue preference share. In that case, those people who have super surplus money, they have been informed that whatever money is there in free reserve, transfer that to CRR. So as per section 69, whatever money is parked in the CRR can be used only for the purpose of issue of bonus share. Bonus share issue means what? It will lead to increase in capital. It will lead to increase in capital. So which means here the security of the external liability holders is still secured. So here for the purpose of section 68 alone, even security premium can be treated as free reserve for the purpose of transferring. But here what disclosure I gave you, what disclaimer I gave you, that ICAI, not in every question they transfer the SPR to CRR, but in only very few questions. So in the examination, you have to give the suggestions. You have to give the assumptions and accordingly make a impact in your notes to accounts. This we discussed. Yes. Then we discussed that buyback, for you to do the buyback, you can do the buyback of only fully paid equity shares. We saw in the last class that when you try to bought back when you try to do the buyback of the partly paid shares, even though section 68 was complied with, even though you kept the capital intact, though the security of in spite of that, the security of the creditor got reduced. In spite of that, the security of the external liability holders got reduced. You saw the example, do you remember? Earlier it was 3 before buyback. Then for the partly paid share, we did the buyback and it became 2.9 or something it became. Still the liability holders suffered there. So with that, we concluded that the buyback of only fully paid shares needs to be done. If it is partly paid, then what are we supposed to do? Make it fully paid. So how will we make it fully paid? We have 2 options. One, you will ask a shareholder to pay the remaining 2 rupee or 3 rupee of call money. Once he pays that, then the capital become fully paid up. So for that, what is the first step? Equity share final call to equity share capital, and then bank to equity share final call. This is due entry, and this is the receipt entry, payment entry, whatever you say. Now, if you are not interested in getting this money from the shareholder, then in that case, you can capitalize your reserve to the capital. So this is also called as bonus, which means what? I'm giving the 2 rupee from the pocket of the company. So when you're using the reserves for the purpose of raising your capital, that process is called as issue of bonus shares. In that case, what will you do when you're trying to utilize the free reserve? And when I talk about free reserves here, it is purely free reserves only, which is general reserve, dividend equalization reserve, then surplus, profit and loss, retained earning. Only that you can use. I cannot use SPR. SPR can be used as a free reserve only for the purpose of section 68 and not for the purpose of bonus. So what is the entry for this? Free reserve to bonus share and bonus share to equity share capital. By this virtue, the capital which is partly paid now becomes fully paid. What is happening to the video? Constantly it is moving. Okay. Any problem in this? Online people, any problem in this so far?
No, sir.
No, sir.
No, sir.
Please tell me the journal entry for buyback, due entry. Equity share capital account debit to the extent of the face value of the buyback done. Let's say the face value of the buyback is 10 rupees. That is, sorry, if the face value of the share is 10, buyback price also is 10. So here I'll record 10 rupees. But sometimes the face value of the share is 10, buyback is at 15. Buyback price is 15. So extra 5 rupees what you're paying is your loss. So what is that called as? Yes. Premium on buyback account debit. So this is the premium value, security premium. To what? Equity share buyback, which is at the buyback price. Buyback price. This is called as a due entry. What is my second entry? Equity share buyback account debit to bank. What money will you pay now? Buyback price you'll pay. You promise this money. No, this money is what you'll pay. So you'll pay the buyback price. And then next is what? This is a loss. This is a loss. We have to write off the loss at the end of the year. All the normal accounts at the end of the year should be written off by transferring to P&L account. But here we have the option to knock it off against security premium. So security premium account debit Statement of P&L account debit to premium on buyback. Any problem? Now here, security premium account debit, I said there's a dispute. Some people say that we can use, some people say we cannot use it, but ICAI has told that we can use it, so we are using it. Any problem in this? Okay. So are we comfortable with these three journal entries? Okay. Now to keep the capital intact, I suggested two options. Not I, 68 suggested two options. Who am I to suggest? Correct. 68 suggested two options. First is the issue of preference share capital. Please tell me what will be the journal entry for that. Bank account debit to, let's say 9% preference share, 9% preference share capital. Sometime the answer might want you to expand this entry, not a single entry, but two entry you have to pass. In that case, what is the entry? Very good. The bank account debit to preference share application and allotment account. And third will be preference share application allotment account debit to 9% preference share capital. Correct? No? Okay. Next is what? You're transferring the amount from free reserves to CRR. Here, free reserves also include security premium reserve. Now, what is entry for this? Free reserve account debit to CRR. This is done to ensure the capital is remain intact before and after buyback. Any problem in this? Okay. Tell me the journal entry for converting partly paid share into fully paid share. Partly paid to fully paid. First option is what? We are calling the amount. In that case, what is my entry? Equity share final call account debit to equity share capital. Then bank account debit to equity share final call. Okay, this is one option. Second option, the company does not make the call, which means they're trying to use the reserves, convert the reserves into capital. Correct? No, this is by way of bonus issue. So please tell me, in that, what am I doing? I'm transferring the amount from free reserve to equity share capital account. Free reserve to not CRR, equity share capital account. And when I say free reserve here, it is purely free reserve only. Do not get confused with this and this. This is different. This is section 68 compliance. And this is bonus share concept. In bonus share, when I'm telling transfer the amount from free reserve to equity share capital for the purpose of bonus, it should be only free reserves and not any other reserves. Revaluation reserve, not possible. Capital redemption reserve, no. Capital reserve, no. Security premium reserve, no. Free means only free. What is the entry? Free reserve to bonus to shareholders or bonus shares. Anything is fine. Bonus shares also they're using in the C intermediate. Free reserve to bonus shares. And then bonus shares to equity share capital. So this is a temporary liability account. This is a temporary liability account that has been closed and transferred to the equity capital account directly. What have we discussed so far? Summary of the last class. Whatever we learned in the last class is what I've discussed now. Now we'll discuss the new concept. Sometime the company might be running short of money. For that, one option is company can go and issue preference share capital. But sometimes the company has got the money where in the investment, surplus money in the investment. See, when I say free reserves, I have 100 crore with me. So I have so much money to buy back. But when I say 100 crore rupees I have with me in free reserve, does it mean that the 100 crore rupees is there in all cash and bank form? No, it will be invested in multiple form. Some will be in cash, some will be in bank, some will be in investment also. So when I want to do the buyback, when I'm saying that I'm having too much of free reserve, I have free reserves, so I don't want to issue preference share capital. I have a lot of money. I'm quite rich. I can do the buyback on my own without further issue. But that money is not in the form of bank. It is there in form of investment. Now I have to sell the investment, get the money, and from that I have to make the buyback. So now the question is, when I sell the investment, how the entries has to appear. Okay. So now let's suppose in the balance sheet, there is an investment worth 10 lakh rupees. Now in urgency, you're going to sell it and you're selling this at 12 lakh rupees. You're selling this at 12 lakh rupees. So how much profit you made upon selling the investment? 2 lakh rupees profit you made at the time of selling the investment. Okay. So now I'm opening the ledger. Please tell me, where will the balance brought down come? Debit side. 2 balance brought down how much? 10 lakh rupees. Very good. Now, I told you in the foundation, whenever you sell the investment, two monkey will come into picture. First monkey is what? Profit and loss. Second monkey is what? Bank. First monkey is what? Profit and loss entry. Second monkey is what? Bank receipt money entry for investment. Now, please tell me, this investment you have sold at a profit of 2 lakh rupees. So if I want to record the entry for profit on sale of investment, what would be my journal entry? What would be my journal entry? 2 lakh rupees. Sorry, my dear, I'm telling you, I'm recording entry only for profits. Only entry for profit, recording profit. So one thing I know very clearly, 2 lakh rupees is profit. Profit is gain. As per nominal rule. Debit all expense and losses, credit all income and gain. So 2 profit on sale of investment. How much it is? 2 lakh rupees. So credit I have given profit. What will be debit? Debit should be investment. Investment debit means the value of the investment is going up or coming down? Going up, because investment is asset. Asset is debit balance. To increase asset, debit. So if I debit investment, my investment value will go up. So investment account debit 2 lakh rupees to profit on sale of asset. Sorry, profit on sale of investment 2 lakh rupees. My question goes to all of you. Why is the investment value supposed to be increased here? Perfect. Bang on. Bullseye. So she's saying that, sir, when the investment is sold, the money that I'm getting from the person who's buying my investment, that is the money that I'm getting from my what do you call person who's buying the investment from me, he's giving me 12 lakh rupees. But the investment in my book now is at 10. So investment going out is 10, money coming in is 12. This is not matching. No? So what am I doing? This investment which is worth 10 now, I'm making equal to that much. How much money is going to come in? So how much is money going to come in? 2 lakh extra money is going to come in. 12 lakh is going to come. 2 lakh extra is going to come. So the money that I'm going to get is 12. The investment value in my book is currently 10. So I have to increase by 2 lakh rupees so that the level is same. So that is why the entry is investment to profit on sale of asset. So by that virtue, what is my entry going to be? Sorry, what is my posting going to be? To profit on sale of investment. So to profit will come on the investment side, debit side, 2 lakh rupees. Any problem? Any problem here? Now, the total value of the investment is become how much? 12 lakh. Now, you are selling the investment. Debit what comes in, credit what goes out. Debit what comes in. What is coming in? So money is coming in my bank account. How much? 12 lakh. So 12 lakh money is coming in. And how much investment is going out? Same 12 lakh rupees. So bank account debit to investment, 12 lakh rupees. So by bank, it is going to be 12 lakh rupees. Now the ledger is closed. Any problem in digesting these two entries? No problem. But we will not pass two separate entries in your examination because we want to save time. ICAI also recommends you to pass the combined entry. So now, my dear friends, please tell me, if I combine these both entry, what is the net impact? Sir, bank account debit 12 lakh, sir. As it is, bank account 12 lakh will come. Okay. So combined entry is bank account debit 12 lakh. Okay. Then to profit 2 lakh will come, sir. To profit 2 lakh will come. Okay. To profit 2 lakh rupees. But if you talk about investment, we have two investment, one in debit, one in credit. If credit is plus, debit is minus. So 12 lakh minus 2 lakh is how much? Net is 10 lakh. So net 10 lakh will come in the credit. Net 10 lakh will come in the credit. So to investment 10 lakh rupees. So this is the combined effect. Any problem? So instead of doing the combined entry directly and confusing you, I thought of recording it separately so that I can put the concept in your mind. Then when I do the entries directly in the question, I'll do the combined entry only. That time you should not struggle with the logic. So therefore, I explain the logic. Now in this logic, if you have any doubt, please ask me now itself. In this, if you have any doubts, please ask me now itself. Everybody's clear? Then you have to say loud, yes, clear, sir. Clear. Online people, what are you supposed to say?
Clear, sir.
Clear, sir.
Okay, clear or all clear? All clear. Now, same thing. There's a balance sheet. In that, investment is worth 10 lakh rupees. When I'm going to sell today urgently, I'm not able to fetch more than 7 lakh rupees. So 10 lakh worth of investment sold at 7 lakh rupees. Thereby, there's a loss of 3 lakh rupees. So please tell me, what is my first journal entry? Sir, monkey 1 entry is the profit and loss entry. Monkey 2 entry is the bank entry. Okay. Now loss nominal account debit all expense and losses. So loss on investment, on sale of investment, loss on sale of investment account debit. How much? 3 lakh to investment. So please understand, my investment is at 10 lakh rupees. But money I'm going to get is only 7 lakh. How much is the difference? 3 lakhs. So I have to reduce the investment by 3 lakh. To increase investment debit, to decrease investment credit. So 3 lakh, if I do it, my investment gets reduced. So now in the ledger, balance brought down is 10 lakh. When I record buy loss, 3 lakh rupees here, the investment value is becoming how much now? 7 lakh rupees. So investment is, at 10 lakh rupees. Money that I'm going to receive is 7 lakh. So minus 3 lakh, the level is now same. Now what is my second entry? Debit what comes in, credit what goes out. In the bank, money is coming in how much? 7 lakh. And what is worth of the investment that is going out? To investment, 7 lakh rupees. So buy bank 7 lakh rupees. So any problem in this? Now you can pass the individual entry, no problem. But to save time in the exam, what is ICAI recommending you to do? Pass the combined entry. What is my combined entry? So bank account debit 7 lakh, loss account debit 3 lakh. Now investment I have credit 7 lakh highest and credit 3 lakh highest. Both are credit. So both are credit means add. Both are credit means add. So to investment how much? 10 lakh rupees. To investment 10 lakh rupees. So this 10 lakh worth of investment is going out. In that 7 I am getting and 3 I am not getting, which is a loss. So this is the combined effect. In this, do you have any problem? Online people, in this, do you have any problem?
No, sir.
Very good. In that case, please take illustration 1 of your ICAI study material. Please take illustration 1 of your ICAI study material, which is on page number 12.8. Can I read? M Limited furnishes the following balance sheet as at 31st March 2001. Any problem? Particulars, notes, and the figures are given in thousands. So this is 5,000, which is nothing but 50 lakhs. So they're given share capital, reserves and surplus. Non-current liability, under it we have long-term borrowing. Trade payable is given, okay. Then we have asset under the non-current asset, property, plant, equipment, 2750. Non-current investment at cost, okay, which is 5,000. Current asset, we have inventories, trade receivable, cash and cash equivalent. No problem. Got it. Notes to accounts is given. Authorized, issued and subscribed shares is how much? 3 lakh equity shares of 10 each. Fully paid. 20,000 9% preference share of 100 each. Okay. Reserves and surplus how much? Capital reserve 10. Revenue reserve 4,000. Security premium is given. Profit and loss account is given. Total is given. Debentures, PP, okay. All that is fine. This is the main required question. This is the requirement of the question. The company passed a resolution. To buy back 20% of its equity capital at rupees 15. What is the face value of the equity share capital? Smriti, what happened? What is the face value of the shares per equity share? 10 rupees. How much are you going to repay it back at? 15 rupees you're going to repay back. And how much percentage are you going to buy back? 20% of the equity capital you're buying back at 15 per share. For this purpose, it sold its investment. For 30 lakh rupees for 20 lakh rupees. How much is 25 lakh rupees. How much is the investment? It is 5,000 means how much? 50 lakh. 50 lakh investment is that totally. In that, they're not totally selling all the investment. Look at the language. For this purpose, it sold investment of 30 lakh. Out of 50 lakh, 30 lakh worth of investment is sold for 25 lakh. So how much have we sold at profit or loss? Loss of how much? 5 lakh rupees. Any problem? No problem. You are required to pass the necessary journal entries. My question goes to all of you. To comply with section 68, we have to keep the capital intact. For this purpose, Are we issuing any preference share capital? No. Which means, can I say I'm going to do the buyback out of my own funds, own reserves? Yes. In that case, what are you supposed to do to keep the capital intact? You have to transfer the fund from free reserves to CRR. So now please tell me, what are all the different types of entries that I have to pass? Sir, one, I have to pass the entry for buyback, due entry, and buyback payment entry. Even before that, to comply with section 68, I have to pass the yes. So transfer of free reserves to CRR, to comply with section 68, this I have to pass. Even before that, what am I supposed to do? I have to sell the investment. So selling the investment is one category. So sale of investment. I'm trying to do what? I'm trying to segregate the category of the journal entries that you have to pass. Like that, how many other categories are more possible? If I'm not transferring this to CRR from free reserves, then I'll be issuing preference share capital. Or it could be a combination of both. Partly preference share capital is issued, partly I'm using my own fund. Correct? What is my next possible type of journal entry? That is that. Before that, converting partly paid equity share to fully paid equity share. And then write off of what? Premium on buyback. So basically, write off entry. So how many categories or how many types of entries that we've seen so far? 5 type of entries. One is sale of investment, which we've learned today morning only. Then compliance of section 68, transfer from free reserve to CRR. How much value? Amount equal to the face value of the buyback, done. Then preferential capital entry or a combination of both. Then the due entry for buyback due entry and buyback payment entry, third category of shares. And then fourth is what? Converting partly paid equity shares into fully paid equity shares. One more category is what? Write-off category. So these are the 5 categories of shares that we have discussed. So in future more will come. In future more categories will come. As of now, only 5. In this 5, what all categories are applicable for this question? Okay, now the question what? Okay, now the question what Nishi is asking is, sir, conversion from party to fully paid, when am I supposed to do? It should be the first entry. Correct. See, whether you pass this here or here or here, it doesn't matter. So basically, it should happen before the buyback has been done. Even before you transfer to CRR, you can do it. Okay. So order anyways in your PDF, I'll set and give you. Now, why didn't I fix the order as of now? Because we are yet to discuss few more other entries. So once we cover all the categories of entries, then I'll give a proper order. Now, what am I doing? I'm just trying to give you those 5 categories of answers. Now, please tell me in this, which all is applicable for us? So sale of investment is applicable. Then free reserve to CRR is applicable. Due entry payment is applicable. That's all. So we are doing the buyback on premium. So right of entry will also come. So 4 entries are coming. Now what order do we go by? First is sale of investment. Next, transfer free reserve to CRR. Then due entry, payment entry. And fourth will be right of entry. Any problem in this? What is the requirement of the question? You are required to pass the necessary journal entries. Also, can we prepare the balance sheet? They have not asked it. Next question onwards, it is there. But if you're practicing, practice for all the questions. Can we do it? Yes. So please note it down. Also prepare balance sheet as per schedule 3. Please prepare the balance sheet as per schedule 3. Also prepare balance sheet as per schedule 3. So please take a fresh page. What will write as heading? Journal entries in books of company name, please. M Limited. Okay. Journal entries. Or you can write in the books of M Limited. In the books of M Limited. Tell me the format, please. Fast. Date. Particulars. Debit rupees. Credit rupees. Okay. First entry is the investment sale entry. Investment is sold at profit or loss? Loss. Okay. How much money is going to come to your bank account? 25 lakh rupees. Out of 30. So bank account debit. 25 lakh rupees is going to come to your bank account. Now, can you want to write in thousands? Can you do it in thousands? Rupees in thousands. So it will be 2,500. And how much money is not going to come? 500 is not going to come. This is my loss. Loss on sale of investment account debit. 500. Guys, also remember, whenever I'm trying to do right of entry means not just premium. Right of entry should also be for so either you put right of entry, and second category is what? Closing entry for profit or loss on sale of investment. Guys, are able to follow? Because this loss also we need to give the impact of the financial statement, where we'll discuss now. And what is the worth of investment that is going out? 30 lakhs. So do investment 3,000. Being investment sold at a loss, narration is very important. Any problem? Okay. Next entry. To keep the capital intact. Now please tell me, what is the capital percentage that you're going to buy back? 20%. So please come back to your notes. Guys, you have 3 lakh equity shares. 3 lakh into 20% means how many shares are you going to buy back? 60,000 shares I'm going to buy back. Into 10 rupees, how much? 6 lakh rupees is the face value. And this amount I'm transferring from free reserve to CRR. So some people get confused that, sir, 6 lakh, what is the buyback price? 15 rupees. If I multiply, how much it is? 9 lakh rupees. So should I transfer the entire 9 lakh to CRR? No. Guys, we want to only keep the capital intact, not the entire buyback value. So out of this 9 lakh, how much is my capital portion? 6 lakh. So this amount only I'm supposed to transfer from free reserve to CRR. So now here, let's have a look at what all free reserves I have. Capital reserve is my non-free reserve. Revenue reserve is nothing but general reserve. It is my free reserve. Security premium, generally it is non-free. For the purpose of section 68, it is free. But ICAI has not used security premium here in the question for the purpose of transferring. Are you able to follow? Profit and loss is my free reserve. So which means using these both, I can transfer the amount to the yes, CRR. So how much I need? Let's calculate. Entry is what? Yeah, so 6 we calculated, no? 3 lakh into 20%, how much? 60,000 shares into 10 is how much? 6 lakh, which is nothing but 6,000. Correct? Now, how much of revenue reserve I have? 4,000. How much is there in P&L? 1,800. But in the P&L, you have to give the loss impact, no? So guys, please tell me. Now let's discuss. Loss on sale of investment. Where will you record? In the financial statement. Other expenses you'll record. Am I right? So can I say this has the impact on your P&L? P&L has got final impact where? In your surplus, which is nothing but here. So out of this 1,800, first 500 I have to segregate for losses. Need understood? Okay. Nishi, my question goes to you. This loss of 500, is it not a revenue loss? 100% is a revenue loss. I mean, obviously, this is a loss that is happening by the balance sheet item at the balance sheet level. It is a capital loss, no doubt. But still, we record this in the Schedule 3. Where in Schedule 3? Will you record in cost of material consumed? Purchase of stock in trade? No. Conventional other expenses? Okay. So when I record this in other expenses, can I say this 1,800 profit will be reduced by 500? If I record this 1,800 is a profit already given before the sale of investment. Guys, before I've sold investment, what is the profit in the balance sheet? 1,800. So when I sell the investment at a loss, if I sell this investment at a loss, what will happen? What will happen? My profit will reduce. If my profit reduces, can I say this I have to minus from here only? That is what I'm doing. So this is how much? 18,000,000 means how much? 18 lakh. In that, how much I'm supposed to minus? 5 lakhs. So how much is the balance? 13 lakh rupees. So I am setting aside the loss amount first towards the loss on sale of investment. Any problem in this? Online people, any problem in this?
No,
sir.
sir.
No, sir.
Okay. Now, how much is the balance in the P&L account? 13 lakh. How much is the balance in the reserve account? 40 lakh. Put together how much? Put together how much? 53 lakh. How much we have to transfer to CRR? 6 lakhs. Any problem? 4,000 is how much? 4,000 of 1,000 is how much? 40 lakh. And 13 lakh of the P&L account. Put together how much? 53 lakh. And how much am I supposed to transfer? 6 lakh I'm supposed to transfer. Do I have sufficient money? Yes. So can we transfer it? Please tell me how much. So you will first utilize revenue reserve. First, see, sir, first of all, you don't have to go to P&L itself. Why? Because revenue reserve itself have too much. Revenue reserve itself have too much. In case you feel that, no, sir, I want to use P&L, for that, what I tell you, if you want to use P&L, you can use it, but after minusing the loss on sale of investment. Because when I'm transferring the amount from free reserve to CRR, I discussed yesterday, there's no order that is being given by section 68, which means I can use the revenue reserve first and P&L later, or I can use P&L first and revenue later. So if you're choosing revenue first, then there is no problem. Forget this loss part. I have nothing to do this. I have nothing to do with this. But if you're deciding to transfer P&L amount first, so what I'm telling is that before you transfer the entire 18 lakh to CRR, what are they supposed to do? Segregate 5 lakh for the purpose of offsetting the loss. When I'm minusing this 5 lakh rupees from the P&L, it doesn't mean that I'm directly minusing on the balance sheet. We will route it through P&L account. But here they are not asked us to prepare the P&L, no? But if I prepare the P&L, this 500 will go where? In the P&L. The loss will appear, and that loss eventually will get affected where? Here only, no? Ultimately, the loss will get affected in your P&L account. So that is why on the face of the balance sheet, we are adjusting it. But technically, from where we have to adjust income? From the statement of P&L. From other expenses, we will adjust income. But we don't prepare P&L now. So directly, we are adjusting in your profit and loss account. Any problem here? But we are not touching P&L now because we have sufficient general reserve. We have sufficient revenue reserve. So transfer from GR, revenue reserve, to CRR. To CRR. Sir, how much should I transfer? Amount equal to the face value. Please tell me. Face value of equity shares bought back is how much? 60,000 into 10, which is 6 lakh. I'm teaching you the calculation. Minus preference share capital issued is 0. So balance 6 lakh, balance to be transferred to CRR from free reserve. This is how the calculation needs to be done. Any problem? Sir, what did you do? Can you please explain? I'm trying to do a calculation. What calculation? I'm trying to see what is the face value of the equity shares that I bought back. Sir, 3 lakh is the total capital. 20% I'm going to buy back. So 3 lakh or 20% is how much? 60,000 shares I'm going to buy back. At how much? 15. But I want only face value. How much is face value? 10. So 6 lakh is the total face value of the equity share bought back. For that, are you using any or issuing any preference share capital? The answer is no. Issue of preference share capital in this question is 0. So balance 6 lakh entirely have to keep the capital intact by transferring from free reserve to CRR. Any problem in this? Any problem in this? So now please tell me, how much should I transfer to CRR? 6 lakhs, which is 600, not 6,000, 600. Any problem?
So why did you minus preferential issued, sir?
Because in case in this question had they told, I'm issuing also preference share capital for 2 lakh rupees. அப்போ 6 lakhல வந்து 2 lakh rupees preference share மூலியமா capital intact ஆயிடுச்சு அப்படின்னா then balance 4 lakh only I should transfer to CRR to keeping the capital intact, no?
Oh, yes, sir. Okay.
How much capital you have to keep intact? 6 lakh. In that, let's say you've kept the capital intact by issuing preference share capital. Of the balance capital, how much I have to keep intact? 4 lakh, which I'll take it from reserve, na?
Yes, sir. Understood.
Now, next question. Sir, investment sold, money received. Section 68 complied by keeping the capital intact. Now can I go ahead and do the buyback? The answer is yes. So please tell me what is the buyback due entry? Equity share capital account. Very good. Debit to, sorry, we have a premium also. Premium is a loss, debit all expense and losses. So premium on buyback account debit to equity share buyback. How much? 60,000 into 10. Show the calculation besides 6 lakh. 60,000 into 5, which is 3 lakh. And total is how much? 9 lakh rupees. Any problem? Narration will manage. Thousands, ayyo. Seri. 6,000. Okay, sorry. Now, payment entry, please. Equity share buyback account debit. How much? 900 to how much? Bank 900. So buyback entry also over. Due entry and payment entry over. Done. Now you have to identify the nominal accounts. How many nominal accounts? This is one nominal account which I have to write off from your P&L. And this is one nominal account which I'll write off from security premium first. If that is not sufficient, then from P&L. Any problem? No problem. So first, let's do the premium on buyback. So please tell me what is the write-off entry for premium on buyback? Security premium reserve account debit to premium on buyback. How much premium need to be written off? 300 rupees we have to write off. Okay. And how much is there in the premium account? 500 you have. Oh. So after writing off 300 from this, how much still is there in the premium account? 200 is still there in the premium account. Any problem? So this is premium on buyback written off. Premium on buyback written off. Okay, next. Loss is currently in debit. To close, I had to give a credit. So what is my next entry? P&L account debit. P&L account debit to loss on sale of investment. How much it is? 500. Is it right? So loss written off from P&L account. Any problem with this so far?
For this repayment, we need 900.
Correct.
But in cash and cash equivalent, there are 100,000. But
No problem. The question what Kritin is asking is, sir, in the cash and cash equivalent, already 1,000 is there. And for me to do the buyback, I only need 900 rupees. So from this 1,000, 900 I will comfortably repaid. No. My dear friends, you have to understand that whatever cash and cash equivalent is there, means you're telling that whatever entire money is there, everything I'll use it for buyback, means that tomorrow when I'm supposed to make the payment to the creditor, tomorrow when I have to buy, fresh raw materials for the manufacturing purpose, tomorrow when I'm supposed to make the payment to my staff salary, from where will I get the money from? If ella money, whatever you have, if you use it for buyback purposes, then where will you have the money to, do your working capital expenses? I'll be to follow. So for that reason, they have calculated that for next few months, how much of working capital is required. They've calculated how much of working capital is required. Accordingly, they've decided to sell the investment and raise the money. That is, they've sold investment, converted the investment into cash so that they have the sufficient cash in hand to take care of their monthly expenditures. Am I loud and clear? Now you have to see that these entries are affecting which all accounts. Can I say this will affect your bank account? Loss on sale of investment account is opened here and closed below. So I'm not bothered about this. This will affect my investment account. This is going to affect my revenue reserve account. This is going to affect my CRR account. Now, what are we doing? We're trying to categorize that this amount is affecting which account. So when I'm preparing the balance sheet, it becomes easy for me to adjust the amounts. Equity share capital, this will reduce the equity share capital. Premium on buyback is opened here and it is closed here. Equity share buyback is opened here and closed here. This will reduce my bank balance. SPR debit will decrease my security premium reserve. This 500 will reduce my P&L, and this loss has been closed. So when you're preparing the balance sheet now, all these accounts will get affected. Bank account, investment account, revenue reserve account, CRR account, equity share capital account, bank account, SPR account, and P&L account. Apart from these, none other accounts are going to get affected. Inventory, is it going to get affected? No. Trade receivable? No. Property, plant, equipment? No. Trade payable? No. Long-term borrowing? No. So except these, all the other accounts are going to get affected. Any problem? Can we prepare the balance sheet? Let's start. What will be the heading? What will be the heading? Balance sheet as on 31st March 2001. Balance sheet as at 31st March 2001. Particulars, note number 31st March 2001. In that the first item is equity and liabilities. In that the first one is shareholders funds. Shareholders funds. Under that we have share capital. 2 is reserves and surplus. Second category is non-current liabilities. You can leave line and also write it. It's okay. If they're asking this question with journal entry and balance sheet, 10 marks you can expect. If there is more complicated with more entries, then max to max 15 marks, not beyond that. Under that, we have only one item, which is long-term borrowing. Guys, you have to open your mouth and participate. Okay, that's all. Third category is current liabilities. Under that, we have 3 items. First one is only one item, no? Only one item, sorry. For asset, we had 3 items. Okay. Trade payables only. That's all? Okay. Then total. Below that, 2 assets. Under that, first one is non-current assets. Under that, the first one is property, plant, equipment. Second one is non-current investments at cost. Correct. Property, plant, equipment, and intangible asset. But I'm doing what they are doing it because we're copy pasting from here. No, it's okay. Non-current investments. Next is what? Current investment. Sorry, current assets. Under that we have first one is inventories. Second item is trade receivable. Third item is cash and cash equivalents. Then total. Done. Now next below that, Notes to accounts. Notes to accounts. Another the first notice, share capital. Under the first one is authorized capital. Authorized capital. What is another name for authorized capital? Nominal capital, registered capital. Very good. We have how many class of shares? Two class of share. One is equity, second is preference. So 3 lakh. So should I put 3 lakh or should I minus 60 and write 240? 60,000 shares are bought back. Sir, even though 60,000 shares are bought back, 60,000 share you cancelled, authorized will remain 3 lakh only, no? 3 lakh authorized, 3 lakh issued. In that 60 bought back, so 240 is issued, but 3 lakh still authorized cannot be surrendered. No, authorized will be same only. So 3 lakh equity shares of 10 each fully paid up. So you write authorized separately, issued, subscribed separately. Don't write what you have done in textbook. Authorized and issued, subscribed separately. So 3 lakh equity shares of rupees 10 each. How much? 30 lakhs? But it should be 3,000 because all these are rupees in thousand. So it is 3,000. Second is what? No, heading. Oh, sorry, preference share is there. No, sorry. How much preference share? 20,000, 9% preference share of 100 each. 20,000, 9% preference share of rupees 100 each. How much it is? 2,000. That is 20 lakhs. Okay. Total how much? 5,000. That is 50 lakhs. Second is what? Issued, subscribed, and paid up capital. Under that now, how much is the equity share capital? Yes, 2,40,000 equity shares of rupees 10 each. How much? 2,400 and 20,000 9% preference share of rupees 100 each, which is 2,000. Total is how much? 4,400. Now, what is the important point that you have to take care of? This anybody will do. Who will give the disclosure of the buyback? So buyback order disclosure also we have to give. So what will you write here? During the year, company bought back 60,000 equity shares at rupees 15 each. Company bought back. I'll write in different color pen so that you'll remember. Company bought back 60,000 equity shares of rupees 10 each at rupees 15 each. Any problem? This is the important disclosure. That's why I made you do the balance sheet. Sir, for writing this red line, so much of big balance sheet, Manisha is like, sir, what, sir? You would have told us, we would have written the notes aram se. So this is the practice of schedule 3 also, no? Because you guys are Gajani fellows. You'll forget any time. So come back and write 4,400. 4,400. Please tell me if this is a 10-mark question, how much minute maximum you can spend for this question? 18 minutes. 18 minutes maximum. How, sir? Your examination is for 3 hours. 3 hours means how many minutes? 180 minute divided by 100-mark paper. So you have 1.8 minute available per mark. So 1.8 minute into 10 mark means how much? 18 minutes maximum you can take. If the question is a little bit short, easy, 15 minutes you'll have to finish. If the question is short, Easy. Round down to 15 minutes. The question is a little bit lengthy. Max to max 20 minutes. So now, when we are learning, when we are in the learning phase, we will take almost double the time to solve this answer. But when I'm giving the homework questions, no, you have to keep a timer and solve with the timing. Means reading right from reading the question to completing the answer. You have to complete them within the given time frame. So that practice you have to do right from now. For all the PEP questions, marks have been allocated. So MTP, RTP question, what you're doing at home, whether you don't keep the timer or keep the timer, I'm not bothered. But all the PEP questions that you're working out, ensure that you look at the mark, allocate the stopwatch timing, and then try to solve it. Initially, you will not be able to complete within time. So to complete within time, what are you supposed to do? More revision and more practice. The more you practice, you become faster at it. Faster means what? Thought process also becomes faster. Writing also becomes faster. Nalla pinch panni vidunga. Headache. Okay. So, sorry, I got deviated. So more practice means what? It will increase your speed. That is thought process of processing the answer in mind. Plus, you have to increase your writing speed. Both you have to increase it. Am I loud and clear? Online people, am I loud and clear?
Yes, sir.
Okay. Now,
Yes, sir.
are we supposed to give the notes to other accounts? Reserves and surplus, we have to give long-term borrowing notes and all. Risk we have to take. If the time is short, better avoid the note what has been given here. Let's suppose if they have given the breakup here, long-term borrowing, if the time is short left, you're not able to complete the paper on time, then you may skip this. But if you feel that you have time, I can do it, then you have to do this and this also. Am I loud and clear with what I'm saying? You have to take a call in the exam hall depending on the time what you have. Okay. Next is note number 2 for reserves and surplus. So now, reserve and surplus. Okay. In that, the very first reserve is which reserve? Capital reserve. Guys, did I make any change in the capital reserve? No. Now, can we do it this way? Can we do it? We'll do the vertical itself. No, it's okay. That is how your textbook is doing. Otherwise, I'm comfortable with opening balance, addition, subtraction, closing balance. That becomes more organized, but we'll do vertical format itself. No problem. Capital reserve. First item directly in the outer column. How much? 10. Okay. Second item is what? Your revenue reserve. Before that, without forgetting, CRR was created for the first time. Correct? No? Create your CRR immediately. Second one is CRR. How much CRR you have created? Come back here. Come back here. Come back here. Yes. Now, the moment you complete it, put a into mark for this. So whatever impact of this you're giving in the schedule, put a strike off so that you have a control that, okay, this I have what do you call it? Incorporate in the notes to accounts. So it is 600. So I'm recording 600 here. Any problem? Okay. Next is what? Any other non-free reserves? Security premium is a non-free reserve. So I'm going into order. Security premium. Security premium reserve in the inner column. In the inner column, how much it was? 500. What did you do this? Less. Written off. Premium on buyback. Premium on buyback. How much did you use for that? 300. So balance is how much? 200. Without forgetting, come back here and strike off the SPR part. This is over. Next is third item. Now free reserves. Sorry, fourth item, free reserve. Revenue reserve. What is another name for revenue reserve? General reserve. Very good. Inner column, how much? 4,000. This, what did you do? Transfer to CRR. How much? 600. What is the balance? 3,400. Okay. Fifth reserve is P&L reserve. So P&L account basically. P&L account. How much is the inner column? 1,800. Less written off loss on sale of investment. How much it is? 500. How much is the balance? 1,300. Very good. Now please total and tell me how much are you getting? 5510. So please come back to the face of the balance sheet and write 5510. Note number 2, 5510. Note 3, you can copy paste from your question, which is 400. If time permits, please write the note number 4 also in your answer script, because when you're presenting the balance sheet, generally you have to present the entire balance sheet how it is expected. So if time permits, please do note 3 and note 4 also. If time does not permit, then what is important? This is not important for me. What is important is the share capital part, journal part, revenue reserve ka notes. That is important for me. So that will be always the first priority. Trade payable. There is no change in the trade payable. So please come back, copy paste the same value, which is 40. Now please tell me what is the total of equity and liability. 4,400 plus 5,510, 400 plus 40. 10,350. Online people, please confirm. Online people, please confirm. Is this right? Not right? Wrong? What is it?
Right, sir.
10,003.
Perfect.
Correct, sir.
PPE, can I copy paste the same value? No change, no? 2750. Okay. Investment, we have to do the working note. Working note number 5. 4 is your, sorry, 3 is your debenture, 4 is PPE, 5th is your investment. What investment? Non-current investment, no? Coming. Non-current investment. Now, what question Kritin is asking is that, sir, this investment was non-current. So before selling, we should have classified to current and then I should be selling it. No, please understand. When will I classify something from non-current investment to current investment? When I'm going to, where I have the intention to liquidate this in next 1 year. This did not happen. Like, it is not like when I'm planning now and I'm doing after 1 year. Buyback I've planned now, and within next 1 month, I have to sell the investment, get the money, and do the buyback procedure. So even before the year is ending, from this non-current investment itself, in an unplanned manner, I am selling the investment. Please understand, when I'm selling the investment as per a plan, okay, now I'm putting investment for 10 years. 9th year, what will you do in the beginning, or 9th year end, what will you do? You will transfer that investment from non-current to current, because in next 1 year, you're going to sell it. Let me take an example here. Here, this is 1, 2, 3, 4. Okay. All this put together 4 years. So I'm putting investment here. So at the end of year 1, non-current investment, non-current investment, non-current investment. At the end of the 4th year, what am I supposed to do? Since I'm going to sell here, 5th year, at the end of the 4th year, I have to reclassify the non-current investment as current investment, because I'm going to sell the asset on or before the benchmark date. So when you plan the investment, in that case, you have the timing bandwidth to reclassify from non-current to current. Now what happened? You are in year 3. You were actually planning to sell this investment in year 5 technically. But urgently you decided to do buyback and you sold the investment when it is already in the non-current account. Because out of a sudden, I've decided to do a buyback. So buyback procedure started somewhere here, it got ended here. Balance sheet you prepare when? At the end of the year. So till the end of the year, I cannot wait, no, because I will classify from non-current to current. Then only I'll do buyback, because Pratik sir said from current only I can sell the investment. Arey Baba, I never said that. From current only you can sell it. From non-current also you can sell it. When you sell it from non-current, it is a unplanned sale of investment. So here the buyback was proposed and here the buyback was executed. In between, I was in need of money. So I am touching the investment, and the investment is sitting where? In the non-current. So I'm selling the non-current investment on spot. Are you able to follow? When I have my own luxury of time, okay, Varam say in 4th year end, I will classify from non-current to current. Then from there, I will, sell the investment after 1 year. Then what you're saying is possible. But here, all of a sudden, we decided to buy back. All of a sudden, we sold the investment. And then all of a sudden, we made the buyback also. Buyback process was completed. So by that virtue, when I sold the investment at this point of time, the investment was at what classification? Non-current. Hence, this is affecting the non-current account. Is the logic clear? So non-current investment 5,000. Opening balance 5,000. How much did you sell?
3,000.
Sale 3,000. So what is the closing balance? 2,000. So please write on the face of the balance sheet 2,000. 2,000 cost of investment is still there in the business. Inventories, did you change? No. Same 1,000. Trade receivable, did you change? No. Same 2,000. Cash in, cash equivalent, did you change? Yes. We have to prepare note number 6. What is opening balance? 1,000. Then what happened? Add proceeds from sale of investment. This is the right language. How much did you receive?
2,500.
2,500. Less payment towards buyback of equity shares. How much? Minus 900. Is there anything else that you received or paid? No. So what is the balance? 2,600. Okay. 2,600. Any problem? Online people, any problem?
No,
Give
sir.
me the total of the balance sheet, please. 10,350. Now let's come back and check. Did we give impact to everything? P&L impact we gave. Bank impact we gave. Capital impact we gave. Revenue reserve impact we gave. Investment impact we gave. Bank impact also we gave. All the impacts has been taken care of. So since we have taken care of double entry system of accounting, the balance sheet is now automatically tallying. Tell me people, this is buyback. Easy type of question. Now as we proceed, the things will get only complicated from here. But this was your first question of ICAI model. Without the base question that we did yesterday, example 1, 2, 3, 4, 5, will you understand the essence of this topic? No. So that is why it is very essential that we do the basic first and then come back and do the main answers. We have still half an hour left. Can
Can
we do
you
one more
show
question?
balance sheet once again?
Once again. Where did it go? This one. Which part? Kana? Full balance sheet or liability asset part?
The asset part, asset.
One more question, then we'll wrap up for today's session. No break because 12 o'clock I have to start my next class. And we'll take at least 40 minutes to do one question.
Sir, can you show the notes for cash equivalents around?
Yes.
Okay, sir. Okay, sir.
Okay. Now, illustration. Sorry, I say question 2. Please skip it for now. We'll go to question 3. We'll go to question 3. Because question 2 talks about the redemption of preference share, which I meant to discuss with you. Can I do illustration 3 now? D Limited, a non-listed company. A non-listed company means D Limited is a public company but is non-listed. So please tell me, when D Limited is issuing the shares to equity shareholder, will it be in digital format or physical format? Physical format. Now will you tear or not tear? Within 7 days. Aman 7 days labakna pudsukanta. Okay, right. D Limited, a non-listed company, furnishes the following balance sheet as at 31st March 2001, and all the amounts are in thousands. Wonderful. We have all this drama. I'm not discussing all this question, but just go through. Share capital is given, reserves and surplus is given, Trade payable is given. Property, plant, equipment, non-current investment, inventory, trade receivable, cash and cash equivalent. Pretty much the same like previous question. Now we have 2,50,000 equity shares of 10 each fully paid up. 2,000 10% preference share of 100 each. Bracket mein they have given something. Issued 2 months ago for the purpose of buyback. Chumma they have given this. So we'll leave it there. What happened? Preference share is already issued for the purpose of buyback. Sir, for buyback we will pass entry, no? Only when we pass the entry, when we prepare the balance sheet, that time we'll record this, no? How did this donkey for a record before itself? What is the significance of this word? Yes, 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 yes. Listen to me very carefully. The company passed a resolution to buy back 20% of the equity share at 50 per share. 20% of the equity capital they're buying back. So how much is the total share? 2,50,000 equity shares into 20% means how many equity shares are we buying back? 50,000 equity shares we're buying back into 10 rupees the face value. Forget the buyback price. To keep the capital intact, what is relevant for me? Face value is relevant. One more time, please tell me. To keep the capital intact, what is relevant for me? Face value is relevant for me. What is irrelevant for me? Buyback price is irrelevant for me. Premium is irrelevant for me. For me to keep the capital intact, what is important or relevant for my discussion? Face value, face value, face value. So 50,000 is how much? 5 lakh. You have to keep your capital intact to the extent of 5 lakh. Now for this, they are issuing 2 lakh worth of preference share capital only for the purpose of buyback. So can I say the entry what you are supposed to pass? That this question is already passed, which means the question itself has taken care of 2 lakh rupees capital to be kept as intact. In general, out of this 5 lakh, 2 lakh ka entry you will pass and 3 lakh you will take it from free reserve to CRR. You will pass normally these two entries. But in this question, look at the heart of this question. Such a big heart. They have done half of your job. 2 lakh rupees worth of capital has been kept intact by issuing preference share capital. For that, they have passed the entry also. The impact of this is already given in the balance sheet. So now when you pass the entry, you are supposed to keep the capital intact to the remaining of 3 lakh rupees, which will transfer from free reserves to CRR. How is the twist? Imagine if you don't see this line, what will happen? You are not screwed. You are royally screwed. Because what will you do? You will transfer the entire 5 lakh rupees to CRR. Are you able to follow? So this line is the game changer. So take a highlighter, highlight that particular line. That is a game changer. Now, some people have this habit. When I say take the highlight and highlight, no. Every student inherently has, they have a feeling, like how I have a feeling. I'm a good artist. Like people have some artistic feeling. So what they will do, they'll take fluorescent marker, pink marker, green marker. Just what they will do, they'll keep on painting every single line. They'll keep on painting every single line. ஏண்டா இவ்வளவு கஷ்டப்பட்டு ஐசிஐ புக் வந்து வாங்கியிருக்கோம் எதுக்கு பெயிண்ட் பண்றதுக்கா? So what are you supposed to do? Highlight only those points which are very, very important, which you will forget. And if you take my opinion, don't do the highlighting in the initial 3 or 4 months of learning the subject. Why? Because in initial 3 or 4 months, every line will look important for you. Oh, this important, I'll forget. Oh, this also important, I'll forget. Importantly, full page better. So highlight it only after 3 to 4 months. After you do 2 or 3 revisions, no, you will understand that which line is still troubling you. After 2-3 revisions, then okay, this is the point which is still troubling me. Then you have to highlight that point. Initially itself, don't start highlighting it. Am I loud and clear? Initially, you can use a pen. You can use this hand symbol like me in pencil for highlighting purposes. Okay, but don't use highlighter now. When will you use highlighter? After 2-3 months. After 2-3 revisions, you'll highlight the important point which you still feel that you can forget it. Now, coming back. So this point is very dangerous. I have to take care of. Reserves and surplus is given capital reserve, revenue reserve. Revenue reserve also called as general reserve, which is a free reserve, security premium account, pre-endal account. Wonderful. The company passed resolution for buyback. What is 50 rupees? Buyback price. In that, how much is face value and how much is premium? 10 is face value, premium is 40. Okay. For this purpose, it sold all the investment for 22 lakh rupees. Previous question, part of the investment sold. In this question, full investment sold. My question goes to all of you. How many categories of question we have to cover? All. Do we need to pass entry for sale of investment? Okay. Do I need to? Okay. In this question, to keep the capital intact, are we opting only for first option or second option or both?
First option.
Both. But in this both, this entry has already been passed by the question. So now you have to pass entry for transferring from free reserve to CRR to the extent of the balance amount. Due entry, payment entry. Correct? This is required. Conversion. Conversion not required. Write off of the premium required. Required. For sale of the investment, profit and loss on the sale of investment, should I transfer to P&L account? Yes. Any problem? Can we start doing the entries one by one? Start. Fatafat. Fast. The requirement of the question is to prepare the journal entries and prepare all the journal entries and also to prepare the balance sheet. Tell me, what is the first journal entry, people? Sale of investment. Now, all the investment is sold for 22 lakh rupees. How much is investment here totally? 30 lakh worth of investment. You sold it for 22 lakh. So you have sold at profit or loss? Loss of how much? 8 lakh. So what is my journal entry? Bank account debit. How much money are you getting? 2,200 because it is in thousands. How much money you're not going to get? 800. Loss on sale of investment account debit 800 to investment. What is the investment worth that is going out? 3,000. Being investment sold at loss. After your investment entry, next is to keep the capital intact entry. So here also, if you look at the question is not used the security premium to transfer to CRR. What have they used? Only revenue reserve. Whereas you can use SPR, but they've not used it. So we'll all stick on to what they are doing. How much? You have to show the calculation below. Number of share bought back. How much? 2,50,000 into 20%. How much it is? 50,000. What is the face value of the equity shares to be bought back? That is total equity share capital. Face value of the total equity share capital. 50,000 into 10. How much it is? 5 lakh. To keep the capital intact, issued preference share capital. Entry already passed by question itself. How much? 2,000 into 100 is 2 lakh. Which is how much? I have to make this how much? 5,000. No. This will be 2,000. So balance to be transferred from free reserve to CRR. How much? 3,000. This is the calculation. So 500 minus 200. Okay, 300. So what is entry going to be? Revenue reserve account debit to CRR account. How much? 300. 300. Any problem? Online people, any problem with this entry?
No, sir.
No, sir.
This calculation is very, very important. You cannot skip it. Now, guys, investment sold, money came in, capital intact entry passed. Now, are we good to go into the buyback? Yes, please tell me the buyback entry. Equity share capital account debit. How much? 500. Then premium on buyback of shares account debit. How much? 2000. 2. Equity share buyback. 2500. Can show the calculations working here if you want. It is 50,000 into 10. This is 50 into 40. And this is 50 into 50. This is payment entry or due entry? Due entry. What is the payment entry? Fourth one, above bank account debit. Wonderful, wonderful. Who was that? Bank account debit. Equity share buyback account debit to bank. How much? 2,500. 2,500. Next. Next. Write off entries. So I'm writing off the premium. This premium on buyback is currently in debit. To close, I had to give a credit. So 2 premium on buyback. 2 premium on buyback. How much? 2,000. And I'm going to utilize what? Security premium. Where I have 2,200. So security premium account debit 2,000. 2 premium on buyback 2,000. Then next is what? Sir, loss on sale of asset. Loss on sale of, investment is in debit. To close, I had to give a credit and I'll knock it off from your P&L, statement of P&L. So profit and loss account debit. Profit and loss account debit to loss on sale of investment. How much it is? How much it is? 800. 800. All entries passed. Online people, all entries passed or not passed?
Yes, sir. Pass, sir.
Now you have to knock off the entries and tell me final impact is there where. So this will affect your bank cash and cash equivalent. Loss account is closed already. Investment account. This is going to affect my investment. This is going to affect my revenue reserve. This to my CRR. This is to my equity share capital. This is being closed. Equity share buyback has been closed. This will affect my bank account. Then security premium account. Premium on buyback is closed. This will affect my P&L account. And loss account is closed. Any problem? In previous question, did you give the disclosure in the balance sheet?
Yes, sir.
Okay. Here, if you look at the balance sheet, the disclosure is not given. Is it right? He's telling issued 2 months ago for the purpose of buyback. Preference share is telling. But apart from that, you have to give a disclosure. No, that during year, how much shares have you buyback? So that disclosure they have not given. So please take a pen and write it. What will you write? Disclosure should come. We have to split it. What they've done is wrong. Authorized and issued will split it. We'll do it now. Or else we'll do it. Let's do it. See, balance sheet part, the main format of the balance sheet you will take care of. Can I do the note part? Can I do the share capital part now? And reserves and surplus part now? Rest you will take care of as homework? Okay. So now leave, okay. For previous question, for the main balance sheet, how much page you took? 1 page. So leave one first page fully for the main balance sheet. Let's go to the notes directly. One page leave wholly for main balance sheet. Second page go to notes to accounts. Notes to accounts. In that, the first note is what? Share capital. In that, you have to split separately for authorized and issued. So authorized capital. Under that, the first one is what? 2,50,000 equity shares of rupees 10 each. 2,50,000 equity shares of rupees 10 each. How much it is? 2,500, which is 25 lakh. Second, 2,000, 10%, what will not come? Kanna, before the, see, we are preparing this balance sheet after buyback. And this preference share capital was issued before buyback itself. So how will this not come? This has to come, no? When you have issued the preference share capital, already the money is received. So bank to preference share capital entry passed. So notes to accounts have to disclose, no? This is not the additional information. The question itself, before the buyback was done, they have issued the preference share capital, they have incorporated the notes and given to you. So you have to carry forward the notes as it is, no? Authorized also it will come, no? Without authorized, how can you issue? Authorized, it will come separately. 10,000, 2,000, 10%. Preference share of rupees 100 each. Without authorized, you cannot issue. Correct. So now, when the question itself is saying 2,000 preference share is issued, so what is authorized? If nothing is given, 2,000 itself will be authorized. Correct? No. People are getting confused that why are they recording 2,000 in the authorized? Are Baba, without any shares being authorized by the articles, we cannot issue it. So if the 2,000 preference share capital is issued, then obviously the authorized will be 2,000 only. 200. Okay. So 2,500 plus 200 is how much? 2,700. Next category is what? Issued, subscribed, and paid up capital. In that, the first one is out of 2,50,000 equity shares, how much shares have we bought back? 50,000. So how much is remaining now? 2 lakh only. So 2 lakh equity shares of rupees 10 each. How much? 2,000. And second will be 2,000, 10% preference shares of rupees 100 each, which is 200. Below you have to say, right, company bought back 50,000 equity shares of rupees 10 each, comma, at rupees 50 each. Second note will be this preference share was issued for the purpose of buyback. This also will write as it is. Issued preference share for the purpose of buyback. 2 months is not required. This is only for our information. Issued preference share for the purpose of buyback. So that the person who's reading the financial statement understands that this preference share was, issued specifically for the purpose of buyback. Like that, as a user, I should be aware of it. So how much is total now? 2,200. This will travel to the face of the balance sheet. Now, note number 2. Reserves and surplus. First, write all the non-free reserves. So what is my first reserve? Let's create CRR first. How much is CRR created? CRR created is how much? 300 is created. Then what is my next reserve? Capital reserve. Did my capital reserve get impacted here? No. Capital reserve, 1,000. Third, security premium All the non-free reserves first. Security premium. Security premium. Inner column, how much? 2,200. 2,200. So what did you do? In that 2,000, you use it for the purpose of writing off the premium on buyback. So let's write off of premium for buyback. How much? 2,000. So what is the balance in the premium account? 200. Very good. Third, no, fourth one. Revenue reserve. Revenue reserve. How much in the opening balance? 3,000. You transfer to CRR. So let's transfer to capital redemption reserve. How much? 300. So balance is how much? 2,700. Fifth one, profit and loss account. Profit and loss account. Opening balance how much? 3,500 is it?
Yes, sir.
Less write off of loss on sale of investment. Write off of loss on sale of investment. How much?
800.
800. So what is the balance? 2,700. Total, please. 6,900, which will travel to the face of the balance sheet. 6,900, 2,200. Pakka matching. Trade payable copy as it is. PPE copy as it is. Inventory copy paste as it is. Trade receivable copy paste as it is. But cash and cash equivalent we have to calculate. So what is the opening balance of cash and cash equivalent? Opening balance, how much?
800.
Opening balance was 800. And without forgetting, guys, investment 3,000 was there and you sold all the investment. So this will become zero in the main balance sheet. And this is now 800. Cash and cash equivalent 800 is the opening balance. In that, how much funds you got by selling the investment? You got 2,200 by selling the investment. And then on that, how much have you paid for the buyback purpose? 500. So how much is the balance? No. 2,500 you spent for buyback purposes. So how much is the balance now? 500. So 800 opening balance. 2,200 you received the money. Money came inside upon the sale of investment. And 2,500 rupees you spent, money went out for the purpose of buyback of shares. So balance 500 rupees is the money left over in your cash and cash equivalents. Any problem? Easy? All these are the basic questions. So next class, when we come and solve, we'll have more questions coming into picture. If debenture is issued, what to do? If bonus is coming into picture, then what to do? So we'll do 2 or 3 questions based on those topic. From there, after things will get even more complicated. So it's okay, but we'll do it gradually as how we did so far in the 2 classes. Any doubts so far? Online people, any doubts so far? So I'll not give you more questions for today. We'll have our next class on Tuesday. So let me solve a couple of more questions with more adjustments. Then I'll give you at least some 5-10 questions as homework, which is of the similar model. Is this understood or not understood? All people understood or understood?
Understood.
Understood, sir.
Wonderful. Can we wrap up? No, that I'll be discussing in the upcoming class. Chalo people, that's all from my side for this session. I'll see you all. I'll see you all on Tuesday. What is the timing? 5 or 4:30. It'll be mostly 5 o'clock. So 5 p.m. on Tuesday. I'll see you guys. Until then, bye bye. See you. Take care.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, sir.
Thank you.